The market is going to crash. Bitcoin is crashing. The sky is going to fall. Oh my God, money printing is going on. Stimulus checks are going out. All kinds of disastrous things are happening. But when all of these disastrous things happen, one thing that always goes up for sure is the uncertainty and the fear in the market. And the measure of fear of this market is volatility. And today I did something completely wild. I went ahead and bought volatility. Hello friends, welcome to RG Diaries, and today I have done something really crazy and really wild. I went ahead and purchased volatility. But before I show you what I did, let me give you some background information, because information is power.
Knowledge.
Question number one, what is volatility and what is the volatility index? Basically, you probably have heard a lot of people say that the so-and-so market is volatile, so-and-so stock is volatile, it's a volatile market, it's dangerous. Volatility is nothing but the ability of anything to change very rapidly and is very unpredictable. So it's the measure of the unpredictability and the measure of how much something could change very rapidly. Now, as far as the stock market goes, the US stock market goes, there is an index that is used to measure the volatility. Now this index is called VIX. It is called VIX.
It's complicated, so pay attention.
Now, what is VIX? VIX is a market index that measures expected price movements, expected near-term price movements in the S&P 500 index. So that's basically what VIX means. VIX is a measure of volatility of the market, of the S&P 500 index. And
come on, will you please explain it to me in English?
If in simple words, when the market is all-time high and the market is stable, the VIX is low. And when the markets are crashing, like what happened in March 2020, like what happened in 2008 recession, every time when there's a market crash and there's fear in the market, VIX is super high. Now, VIX has a very special property. VIX has a mean reversion property, which means the VIX will never keep going up or VIX will never keep going down. If VIX goes down, it will come back up. If VIX goes up, it will come back down. And currently, since the S&P 500, it's near its all-time highs, VIX is super low. It is not as low as what it used to be before the pandemic, but it's still very low. VIX, I think, today was 16.89 or something in that range, which is why we went ahead and did something crazy. We went ahead and bought the VIX, since VIX is a mean reversing. VIX has a mean reversal property, and when VIX is low, it can go up, and when VIX is up, it has to come down. I hope I did not gamble. Maybe I gambled. We'll find out. Now the next important question. How do you buy VIX? Can I just go on any brokerage app like Robinhood, Webull, Thinkorswim, Tasty, or any brokerage and just buy the the X number of shares of VIX? Absolutely not. VIX is a volatility index, and we cannot buy VIX just like shares. However, the derivatives of VIX, such as futures and options, are very well traded on all the at all major brokerages, which is why the way to purchase VIX is only through a derivative. And for today's video's purpose, we have purchased VIX through a derivative called option.
I choose the danger.
Now, before I go ahead and show you what the trade was and how I made the purchase, let's look at the chart of VIX. Check this out. So right now we are looking at this 2-year daily chart of VIX. And remember when I said that VIX has a mean reversion property where it oscillates from the mean, and here we can see that. So see how in February 2021 VIX started going up and then VIX came down around to 24 level, and then VIX went up, popped in June, and then popped back down, and then it popped again in September, and then it popped back down, and then again it popped up in October, it popped back down, it went up, went down, it went up, it went down. And this is how VIX keeps reversing every few months. It keeps going up, and then when it goes up it keeps coming down. So right now it is in the down area, which is why I went ahead and purchased a bullish spread on the VIX. Now let's talk about the VIX trade that we did. So we went to the option chain for VIX on September 15th, 2021, and we looked up the option chain and we chose $17 strike call option and then $22 strike call option. So why did we choose 15th September 2021? We chose 15th September 2021 so that we could give VIX enough number of days to have that pop that we want. So 15th September 2021 is about 98 days from today, and we are giving VIX 98 days to have that pop so that we could make our more than $100 profit on the $430 investment. Now today the VIX was trading at $16.89, so we bought the $17 call option, and then to reduce the buying power to purchase that $17 call option, because that $17 call option was costing around $700 each, and we wanted to reduce the buying power for the call option. So to reduce the buying power of the call option, we sold another call option at $22, creating a 5-point white debit vertical spread. So this whole bundle called debit vertical spread costed us $215 each, and we invested $430. Our minimum profit target is $100 on these debit vertical spreads.
That isn't my money! That's no money! That isn't my money!
Which is why if this $430 turns into $530, that's where we want to take at least amount of profit. But what I have done is that I use the Tasty platform, and I've set up this robo order where this order would execute automatically if suddenly someday VIX pops and our $430 turns into $860. This robo would close the position and would take the profit at 100%. I did not set the robo order at 25% or at $100, and the reason being,
I just want you to know one thing. I want this money.
Is that if the VIX pops and if something critical and disastrous happens overnight, I want to make sure that we take the max of the move, which is why I'll set the robo at 100% profit, and for 25% profit I've set up an alert system digitally in such a way that when the value of this whole debit vertical spread turns into $530, which is giving us the $100 profit, I start getting alerts and emails and messages and all kinds of modes of communication to let me know that I am at my 25% goal and that I should go ahead and take the profit and make it rain. Now on the loss side, so since VIX has a mean reversion property, and we expect that the VIX should pop up at some time, so we have given it enough time. We have given it 98 days to pop which is September 15, 2021. But if it still doesn't pop by August 1st, 2021, we want to take this position off for whatever loss there is, because from August, because there's also the theta decay component. This is a debit vertical spread, and this debit vertical spread loses value on a per day basis, similar to an insurance plan. So this debit vertical spread is going to lose about 6 cents per day, which is not that bad. 6 cents per day loss of value to make $100 is not that bad, which is why it was a good trade-off. But it's going to lose value at 6 cents per day if the VIX goes down or stays where it is, and which is why we are just going to only wait till August 1st. If VIX So it's been a couple of days, and interestingly, VIX has consistently been dropping for the last couple of days. The VIX has dropped to $16.29 today, and we decided that since we had already purchased 2 debit vertical spreads, we decided to dollar cost average and size in, and we went ahead and purchased 2 more debit vertical spreads with 5-point wide, $17 call option long, and $22 call option short. Our new total buying average per spread is $206, and our total dollar amount in now we have purchased 4 quantity at $206. So our total is about $826. Our total is at $826. The goal is still the same. So when this $826 turns into $1,026, we'll take these off. The goal is to make around 24%. So we're just waiting for that pop. When the market crashes, VIX goes up, there's fear, and we make the $200.
Easy peasy lemon squeezy.
So this is an update from June the 18th, and on June the 18th, the VIX did pop a little bit. The VIX went to like about $19 or so, and when the VIX popped to $19, we did not see those gains that we were expecting for whatever reason. So we just got bored out of the position, and we said, okay, let's just close this and we'll find something else to get into. And the reason why VIX popped on June the 18th, the main reason being S&P 500 drastically crashed on June the 18th. There's a major, not a major correction, but there's a minor correction in the S&P 500 which made the fear index go up in the markets and made the VIX pop a little bit. So, but we did not see those results that we were expecting, which is why we just decided to get out of VIX, and we closed the position. So we had purchased the debit vertical spread for $826 after all the sizing in and after all the scaling up and everything. So we had purchased the original debit vertical spread for $826, and on Friday, June the 18th, we closed that position for $860. Did not make the profit that we desired. And we barely made like $34 of profit compared to the $200 that we were trying to make. But out of those $34, we did not know there were some hidden fees associated with trading with VIX, which is why we had to pay a bunch of commissions, and we ended up netting like around $14.
I'm so sad. I am so sad. I am so sad.
So that's it, guys. I hope you enjoyed this video. I hope you liked this video. I hope you share the video and subscribe to this channel to keep up with the content that we keep producing every Wednesday. And if you want,
Do it! Do it! Come on! Do it now!
if you want to learn more about option trading, or if you want me to make a video on any of the concept that I have used in today's video, like anything about debit spread, what's a call option, delta, theta, gamma, vega, Greeks, anything, just leave a comment.